Zimbabwean investment banking outfit Morgan & Co. will be hosting a 2023 economic outlook webinar later today. Members of the research and investment banking team will be discussing the opportunities and headwinds facing Zimbabwe's economy. It's a whole lot going on. They have elections as well. Joining us from Harare to give us a preview of the outlook is Batanai Matsika, head of research at Morgan & Co. Batanai, Happy New Year. Thanks so much for joining us. Good to see you again. Your cover of your report, you got two lions fighting, and you're saying there's a battle for supremacy. Help us out. What does this mean? Is Zimbabwe battling other African economies for economic supremacy, or is it battling economic headwinds? What does the cover mean with the lions?
Okay, so it speaks to the theme that we've set out for the economic outlook report, which is the battle to be Lion King. I think this is the major trend or political trend that's going to take shape in 2023, where we're seeing that we will be having the presidential elections. Of course, we have two main political parties here, ZANU-PF and CCC. So that's the main theme that's going to shape strategy in 2023. And of course, we foresee a lot of instability being driven really by election-related issues.
Yep, we've got elections here in Nigeria as well next month, as a matter of fact. Let me take a look at some forecasts for Zimbabwe's economy for this year. So we've got, what do we got? We have the IMF at 3.6. We've got you folks at Morgan & Co. at 2.5. I believe the Ministry of Finance over in Zimbabwe is looking at 3.8% growth. So, I mean, so your forecast is lower. Tell us why yours is, less, lower than the other two, and what you make of their forecast as well. And what are the triggers, I guess, for growth for this year for Zimbabwe?
Okay, I think one of the focus that's not there is actually one by the African Development Bank. I think, it's sort of closer to ours. They're looking at around 2.6, thereabout. I think, it's worth noting that, of course, there are certain sectors that have shown a bit of recovery, especially if you then consider in the mining area where gold has actually helped, growth, and also agriculture and, accommodation sectors. But our concern or our own evaluation is that, there will be productivity related constraints. I think the emerging risk that we're seeing now is that of power outages that's going to affect capacity utilization in key industries. But there's also the issue to do with 2023 to say that there are other risks that will come through, especially when they then consider inflationary pressures that will come with unplanned government expenditures. So we think that overall output will be quite constrained in 2023, and also some of the global risks could come in and affect growth prospects.
All right, you talked about the elections, and we've got, of course, the two main candidates, the president and I guess the main opposition party candidate. This is featured in your report. What's the impact, I guess, with the elections, which is this year, right? And also, the follow through, power transition, so on and so forth. How's it going to affect things with the economy?
So we've evaluated, the political environment, and what we see, especially in yesteryears when we had elections, I think in 2018, our elections were sort of marked by some violence, pre and post election violence. And as a result, we expected that there will be some instabilities, some issues that will come through, especially when they consider just ordinary business. So we expect uncertainty, especially when you then consider foreign participation on local capital markets and even just FDI. So a lot of investors usually in election years, they just have a wait and see approach. So that would affect some deals and also the ability of the nation really to attract the much needed capital. So we feel that these elections would actually have a negative impact in terms of just doing business on a day-to-day basis.
But is President Emerson Mnangagwa, is he favored to win? I know he's facing, I guess, Nelson Chamisa, who is, I guess, the opposition party main candidate. Who's favored here? Is the president favored to win?
Yeah, so you have to look at the dynamics. So if you're looking at ZANU-PF, this is a revolutionary party. It has been there for quite some time. And usually, older people are aligned to ZANU-PF. And also they have a very huge following or a stronghold in the rural areas. And then if you then look at Chamisa, youthful, a lot of youths, below the age of 35 would be sort of aligned to Triple C. But at the same time, if you then look at trends, young people don't really register to vote. So that could work, against Triple C. So we're saying that it's going to be a very tight race. I think, this is one of, interesting elections. And in that event, we'll then expect, some contested results and delays and things like that. So we're saying that 2023, you should expect a bit of friction on the political front before we see stability maybe later on in the year.
All right. Now, you mentioned those productivity constraints earlier. I think power. Yeah, okay, here they are. Capital constraints, policy shifts, and electricity shortages. Can you quickly take us through these three?
So capital constraints, the way that we analyze productivity within the general economy, we use the Cobb-Douglas productivity function, which is basically states that capital or the quantity of capital is quite key when you want to drive productivity. So if you're looking at 2023, we don't expect a lot of inflows in terms of investments that will come through, and even lines of credit. We don't expect that to come through from a productivity point of view. So we're seeing constraints there. Policy shifts, we expect a lot of policy shifts because politics will take center stage. I think in yesteryears we'll see that political decisions tend to override any sort of economic sense. So we expect that to affect productivity levels by the end of the day. So there's also the issue of power outages. Also speaks to the Cobb-Douglas productivity function to say that technological advancements and the availability of power actually adds on to output. So we're seeing a lot of constraints in terms of power and in the region generally. So it's not just Zimbabwe, it's even South Africa. We're seeing a lot of issues on power. So that will affect capacity utilization definitely, and output will be on the low end. And that is why we have a focus of around 2.5%.
Thanks for that. A section of your report talks about the Reserve Bank of Zimbabwe, monetary policy ineffectiveness, and a lack of central bank independence. Can you get into that for us?
I think if you're looking at a lot of central banks, especially in Africa and of course, including Zimbabwe, they lack independence from political interference. So you find that a lot of times certain decisions are passed simply because they are aligned to a particular regime. So they lack that independence, and as a result, a central bank may not be able to actually deliver on its objective of inflation targeting or macroeconomic stability. So the lack of political independence and also the lack of credibility. So if you're looking at the Zimbabwean case, right now we're seeing that there's a growth of a shadow economy where a lot of transactions are happening in cash outside the formal banking system, simply because there's a lack of confidence in the banking sector and in some of these policies. There's also a lack of effective communication. I think in terms of just a forward guidance, we've not seen a lot coming through, especially from the RBZ. And also, there are no consequences for bad outcomes. So in international, international central banks, if they failed if governors fail to meet certain targets, they have to report or give a sort of an explanation. But when it comes to a lot of central banks in Africa, there are no consequences. So we see governors failing to meet targets on inflation, and nothing happens to them. So all those factors actually add to our point to say that it's going to be very difficult for the RBZ to maintain stability or to execute on its key mandate.
Okay, speaking of mandates, you've got inflation, as you mentioned, is one of the Reserve Bank of Zimbabwe's mandates. Your forecast, this scary forecast, 208% by December 2023, the pressure is still there that keeps inflation high in Zimbabwe?
Yes. So one other important driver, we're seeing that there are foreign spillovers within the local economy. So, the Russian-Ukraine crisis has affected, the local economics in the sense that fertilizer prices are on the high side. We're also looking at things such as just general food prices, wheat, and also energy. So we're going to experience that risk from a local economics point of view. But we are seeing that the inflation environment or the current environment, is also going to be driven by political interests. So there's a tendency during election years, to just for unplanned government expenditures. So that will push money supply growth. And as a result, we're going to see a lot of pressures. But also the lack of confidence in the local currency unit. I think the economy generally now, we're looking at 80 to 90% dollarization. So there's no confidence in the local currency, and therefore that will sort of push our inflation numbers up. We're basically focusing an average inflation rate of around 175%. Right up to December 2023.
Gosh, triple digits. Real quick, how about stocks? How did Zimbabwe's stocks perform 2022? What's the outlook for stocks 2023?
So mid-year, last year, 2022, we saw a raft of measures, as you follow, that affected, trading activity. Of course, there was an increase in capital gains tax, a lot of measures that limited the flow of ZWL liquidity. So we saw that the market actually derated in real terms. We're looking at a slump in the overall market of around 40%. Wow. That was the performance really of the stock market. But what we're saying now is the market now looks cheap, definitely, given that it's down quite significantly. We still feel that there are certain companies that are quite solid and defensive, despite the fact that it's an electionary environment. So we favor agriculture or consumer-facing companies, where we are recommending the likes of Delta Corporation, Insco Africa, Micos Limited, and Hippo Valley. We think that investors this year should be quite cautious. They should focus on quality and have a long-term perspective, given that we are now in an electionary season.
Great stuff. Batanai Matsika, always a pleasure talking to you, giving us the lowdown on what's going on in Zimbabwe. Very interesting year ahead with elections, same in Nigeria. Batanai Matsika, head of research at Morgan & Co. Thank you so much for talking to us. Appreciate your time.